Hello, everybody. I just want to give a real fast analysis here, mostly because some of the major news sources are reporting some absolute crap. Bloomberg seems to be chief among them in the whole, the sky is falling, the dollar is weakening, the euro is getting stronger, gold is up, and all of that other mess. The truth of the matter is that this right here, what we're looking at, is a 1 hour time frame for euro dollar. Now, I don't know about you, but this does not like dollar up to me. This looks like dollar range bound to me versus the euro. If we come over here to the pound, we see largely the same thing. Dollar range bound, with dollar currently falling right off of this resistance point, and it's a resistance point that's held for a little bit. If we swing over here, and I apologize for the slight switch, you can see yet again dollar range bound versus the yen. So we've got dollar range bound versus euro, dollar range bound versus pound, and dollar range bound versus the yen. Not only that, but the situation with the euro is a little bit odd because you can see that there is a gigantic, it was like 175 pip gap that happened from the close Friday, wrong spot, from close Friday to 167, there we go. From close Friday to open Monday, there was a gigantic gap in the euro that basically was the market kind of breathing a sigh of relief over the Greece rescue plan. The problem is that while the Forex market is typically very forward-looking, in this case it is being, only seeing what's right in front of its face. Spain and Portugal still have rising debt issues. They still are wrestling with austerity programs, and there is a lot of rumblings that both of them are just going to allow their situation to get to the same spot that Greece was, to kind of force the rest of the Euro nations hand into giving them a very similar Greece-style bailout, just because it will be easier. My point is that the euro is destined for another very steep, very, very sharp fall. I'm going to switch now to the 1 day time frame, and you can see that euro has fallen a few times. We had a low at 32.67 and then a low at 32.82. My suspicion is that within the next 2 or 3 weeks, we are going to see euro sitting somewhere in the 1.31 neighborhood on what is obviously, I'm predicting, a very, very sharp fall. The reason why I'm partially predicting that is we can see this, the euro has kind of done this numerous times, this kind of push up on good news and then boom, and then just falls off a cliff. Push up on good news, fall off a cliff. Push up on good news, fall off a cliff. Well, here we are again, pushing up on good news. The fall off of the cliff is imminent. Not only that, but because of the situation that we have with Greece, I don't believe the market is going to tolerate two more countries, fairly back to back, one behind the other, with very similar problems. And like I said, those problems are rearing their ugly head already. We've already had Fitch downgrade Spain or Portugal. I apologize, I can't remember which. My point is that I called this last upward push in the euro a fool's move. I'm going to continue with that argument. This upward push in euro is a fool's move, and you may want to consider selling short in it. So, as always, if you have any questions, please don't hesitate to leave a comment in the box below.